Hello friends, welcome back to part 16 of my Tesla earnings forecast video review series. I am joined as always by my co-host Loki, and this is the last video that I intend to make on the topic of this forecast because I will have covered everything that was in my 69 post thread on X releasing my latest forecast. By the time we get to the end of this video, I'll have shown you everything and talked about it. And Loki ate his breakfast a couple of videos ago, so he is still napping in bed. I'm going to share my desktop and pick up where we left off. So in the last video we talked about production and deliveries and inventory and how I forecast those. Next, what we need to talk about is how I forecast revenue and cost of sales for Tesla's divisions that make revenue and have cost of sales. Those are automotive and energy and services and other. And they follow the same logic that the production and delivery section followed in terms of I go by site and then I go by model produced at that site, and then for each model I need to forecast detailed assumptions. And I'll just walk you through for the Model S at Fremont, which is the first one in this section, where the assumptions come from. So here's our base configuration assumption. You know, last year the base configuration for a Model S was as high as $104,990 briefly. But other people who were taking delivery in Q4 had placed their orders at a $94,990 base price, or even an $81,500 base price. So I did actually have to dock that one as well, $1,000 for the U.S. deliveries of Model S to buyers in mid to late December of Q4, when Tesla was offering to pay out of pocket the EV tax credit so that people wouldn't wait until Q1 to take delivery of their vehicle. So then adjustments in there as well. But since then, there's been a lower mix of people who were paying $104,990 as their base price, and more people who were paying $94,990 or $89,990. In Q2, the base was $86,990. And in Q3, that's down to $74,990 for people who took delivery halfway through the quarter or later. And then for Q4, it'll begin the quarter that way unless Tesla raises the price between now and then. And that'll be the base price. So hopefully you see how that works. The average Model S base configuration revenue, the weighted average, has fallen by about $20,000 since a year ago. Or will by the time the year ends, Q4 of 2023. It'll be down to $75,000. All right. What else do we have here? We've got paint. In the first half of the quarter, people taking delivery of Model S were paying for paint options if they didn't want the free color. But all the colors are free now, beginning the middle-ish part of Q3. And for all of Q4, any paint color will be free, even the ultra red color, which looks super sharp. Then for the performance package, I've got that assumption held around where it's been in Q2 and in Q1. You know, between $4,000 and $5,000 weighted average performance package. So that's a $15,000 option, but I'm only assuming 30% of Model S buyers are taking it to get the plaid Model S in Q4. That's what that assumption means. Then for the wheels, Tesla has a couple of different options, a $1,500 option and a $4,500 option. So I've got 20% of people taking the $1,500 wheels and 15% of people taking the $4,500 wheels, which would get you a weighted average contribution to Model S revenue per delivery of $975. Then for the interior, the same kind of logic holds. You know, maybe it's about $750 on average when you mix together those who wanted to upgrade to a premium interior with those who were fine with the base free interior option. Then for full self-driving, you got to make an assumption for how many Model S buyers are going to want the full self-driving package to be an option when they buy their Model S. So that's what this assumption is about. I've got that growing sum from where it was in Q2, which is lower than it's been in the past. Probably some people are not paying for the full self-driving option now who would have in the past. I mean, you need to have a lot of purchasing power to buy a Model S in the first place, so probably not that big a deal for people who are buying a Model S. But reasonable to assume that it's not going to go up in the high interest rate environment that we're in right now relative to where it was a year ago. So that gives you the cash buyer ASP for Model S, or how much people are seeing as the total when they configure a Model S they want to buy instead of lease. That's what this line's good for. But that doesn't tell you what Tesla's average revenue is per Model S delivered. You have to make a few adjustments. One of those adjustments is for leased vehicles and other, including resale value guarantee impacts. So I've got some calculations in here for the actuals in prior quarters, as well as for my forecast for future quarters, for the 11% of vehicles that are going to be leased. So that's what these are good for. Then destination and delivery fee is another adjustment you need to make. Everybody has to pay for that, but it isn't in the order configuration screen, so it's not part of the cash buyer ASP that gets quoted to you when you place your order. Then there's regulatory credits of, $100 per vehicle delivered, something like that. So those numbers, and I got a couple of weird numbers in here, but mostly that's a lower regulatory credits number. And then there's other with FSD deferrals, OTA upgrades, and data being, maybe $300 per vehicle worth of other. And that's how you get to your total revenue per Model S delivered. And I also put here how many $1 million worth of revenue that is that Model S is contributing as far as my forecast is concerned. So it was more than $1 billion worth of revenue most quarters last year. I've got it at less than $1 billion. Q1 deliveries were really low compared to most quarters for Model S and Model X. So let's talk about Model X next. It's the same exact format for every model. So the Model S base is now $79,990, but people who took delivery of their Model X before that price increase went into effect paid more for their Model X. So I've got 40% paying $79,990 and 60% paying $96,990, which was the previous base. Paint is also free now on Model X, but it wasn't to begin the quarter. So there would be some revenue for Tesla during the quarter on deliveries of Model X. The performance package is here for those who want to buy their Plaid Model X instead of the regular vanilla version of Model X, which is still pretty fast. Then you got the wheels, the premium wheel configuration. So that's $5,500 if you want the premium wheels. I've got 30% of buyers taking that. Then for the interior and seating config, and the tow hitch is an option, and so you got a different mix here of what those look like. I'm holding that pretty steady with where it usually is. If people want to buy those upgrades, they're gonna. Then there's the full self-driving here, leading you to the cash buyer ASP, which has come down a lot. I'm forecasting that to be below $100,000 for the first time in 7 quarters in Q4, with a little bit above in my forecast for Q3, owing to so many people having already taken delivery of their Model X before the price decrease went into effect. Then we've got the leased vehicles and other resale value guarantee impacts being a big negative number here. Mostly this is from people who are only making 3 years worth of payments and then giving the car back. You don't get the full MSRP from those lease buyers who are taking delivery but then giving you the car back after 3 years. So that's a negative impact on revenue per delivery. Destination delivery fee, regulatory credits, and other. So there you go. That's how you get to total revenue per delivery, and I do have slightly more than $1 billion worth of revenue from Model X in my forecast for Q3. Slightly under that in Q4, when more people are going to take advantage of that lower base config. That's a pretty great deal on a Model X, $79,990. Compared to where those have been selling over the past few years. Next we get to the Model 3. Model 3 base was actually lower in Q2 than it is in Q3. The price has been increased on the Fremont-produced Model 3 by $250, so a higher base. I've got a little bit more paint revenue here. Those were higher last year than they are this year. Performance package, probably a lot of people aren't buying the performance package this year who might have last year due to the higher interest rate environment. Model 3 is Tesla's most affordable vehicle, so if anybody is doing the Tesla stretch to try to buy a Tesla who would normally not buy a luxury vehicle, it's the Model 3 buyers. So probably they're more price sensitive to the performance Model 3 option than the Model S or X buyers would be. We got the wheels. How many people are upgrading to those? Probably less this year than were last year. Same with the interior and seating config option. And the full self-driving, probably less people are taking the $15,000 option in Q1 and Q2. That price came down some in Q3 to $12,000. Probably still a really thin minority of Model 3 buyers are paying the $12,000 upfront for their Model 3 to get full self-driving. So that's how you get to the cash buyer ASP. Then there is the least adjustment you need to make here. These amounts are smaller than they were for Model S and X because the cash buyer ASP dollar amount is so much smaller for Model 3 than it is for S and X. Same destination and delivery fee. Regulatory credits, these are probably going to be small in Q3 and Q4. We saw a pretty decent number in Q2. We'll see how that goes. Maybe I'm right, maybe I'm wrong. For other, I've got some discounting in here for inventory Model 3s that were sold in Q3 with a little bit of a discount because they had some miles on the odometer. So people paid a little less for those, maybe $3,000 less each than they would have paid for a brand new Model 3 shipped straight to them. And there you go. Total revenue per delivery, a little lower in Q3 for Model 3 than it was in Q2, with maybe a little bit of recovery happening by Q4. What's doing that? Maybe a little bit better performance package take rate by the end of this year. We'll need some help from interest rates recovering a little bit probably, and then less inventory discounting happening in Q4 hopefully. Making $2.4 billion worth of revenue contribution from Fremont-produced Model 3s in Q3, $2.8 billion in Q4, about what we saw in Q2. Still less than we got in most quarters last year. All right, Fremont Model Ys. Let's see what I have assumed for the revenue per Fremont Model Y delivered. So $47,740 is the base price for Model Y and has been all quarter. And I think it'll stay there in Q4 is what's in my forecast, with paint options being, worth about $500 worth of revenue per vehicle. Not as many people taking the performance package for the Model Y, probably a pretty low take rate on performance Model Ys. Then some of the people are going to opt for the wheels or the interior seating options. Then you've got the full self-driving package. Probably less take rate on that this year than we had last year. Gets you to these cash buyer ASPs, so around $52,000. That's $10,000 less per Model Y than we saw a year ago. this time, and I've got it, improving a little in Q4, but basically being around that level. I don't think it'll be as low as we saw in Q2. Before we take the penalty for leased vehicles being some of the sales mix for Model Y, destination and delivery fee is always the same. Regulatory credits probably lower in the second half of the year than we saw in the first half of the year. Got some other in here, same inventory discounting assumption in here, leading to about the same revenue per delivery for Model Y in Q3 that we saw in Q2, between $51,000 and $52,000, and then hopefully with less discounting in Q4, more than $52,000 worth of revenue per Fremont Model Y. Nothing for Roadster, not making any Roadsters this year. On to Shanghai. Let's take a look at these. So how much do you pay for a Shanghai Model 3? Well, in Q2, the answer was $32,500. That number is up some since Q2. So some of the people who took delivery early in Q3 got that deal. I'm saying 70% of Model 3 buyers in Q3 will pay the $32,500 because that was the price when they ordered, but the rest will pay the new price. $40,490 is the new base price for the Model 3. And that's what I have in Q4 as well. Maybe I've got room to take that up in my next forecast. So about $500, $600 worth of paint options. Performance package, pretty low to start the year. Maybe that'll go a little bit higher in Q3 and Q4 with more people buying the Highland version of Model 3, which is what validated the price increase for buyers is, well, it's the refreshed Highland version, the Model 3 Plus, being produced now only from Shanghai. So then we've got wheels, we've got interior and seating config, we've got full self-driving, we've got the cash buyer ASP that you get if you add all those up. I probably am going to raise this in my next forecast because it's probably not reasonable that the base config would only be $35 if now we're selling these for $40,490 base, right? So, man, that would be another $5,000 to tack on here in Q4 when I make that adjustment. So expect that to change in Q4. How about the Shanghai Model Y? What's going on there? Well, it was a $36,500 base price in Q2, which I think 77% of buyers are going to pay. But now I've got the other 23% of buyers paying the amount we see in Z263. Let me follow this formula through and see where that's coming from. So that's what you get when you convert the price in yuan, 263,900 yuan, by the conversion rate that I'm using. So if you convert the price in yuan back to US dollars so that I can do a forecast in the same currency Tesla's going to report it, you get up to 47,440 for a base price. And then with the rest of these options, you get to a slightly higher cash buyer ASP out of Fremont for Model Y in Q3 and Q4 than we saw in Q2, yielding these bottom line total revenues per delivery a little lower for the inventory Model Ys in Q3 than I'm forecasting for Q4. All right, no, what's this say? Fremont Roadster. Okay, that's the Fremont Model Y. All right, let me get back down to the Shanghai Model Y and do that again. Okay, these look better. So 39,440 is what I've got for Q3 and Q4. I might take up that number in Q4 to make it closer to, 40,000, 42, 43, 44,000, whatever that number is that we just saw. Then, yeah, paint, performance, wheels, interior seating, you got to get all those in there. You get the drill by this point. So that gets us up to a total revenue per delivery of $44,341 at the newer, higher prices than we saw earlier in the year. And that's all for Shanghai. Let's go on to Berlin. Here's the Berlin Model Y. How much revenue does Tesla make when they sell Model Ys produced in Berlin? Well, I've got it at 38,990 base in Q3 and Q4, with a bunch of people upgrading that because they're only making the long range. So they're getting a 100% take rate on the long range, a 0% take rate on the standard range because they don't make it, and a 30% take rate on the performance Model Y built in Berlin. So that's why these are worth so much more than we saw for the Fremont Model Y, where they do make a standard range, and Shanghai Model Y as well. All right, so with those, we should see this ASP spring back to where it was in Q1, though not to the prior year levels of revenue per delivery. Then when you make the adjustments below the line, after the cash buyer ASP line, gets down to roughly the same number for total revenue per delivery. 53,625 is my forecast for Q3, with a little bit of recovery in Q4, selling fewer inventory models at a discount. And what's left? Well, for Texas, we've got Model Ys being produced at a base revenue of $47,740, I think, per vehicle. Tack on these other options at the take rates that I'm forecasting, that gets back up to a $51,000 cash buyer ASP including options. Then after adjusting for leasing, destination delivery fee, etc., you get to a slightly lower number, just under $51,000, real close to what we saw in Q2 for the Fremont Model Y, and then a little more happening in Q4. All right, what about Cybertruck? Well, I've got a 49,990 base config, but I think the take rate is going to be extremely high on the long range Cybertruck, the dual motor Cybertruck, or the performance package, which will be either a tri-motor or maybe a quad motor. We don't know yet what the options are going to be for Cybertruck, but I have to forecast something, so I'm forecasting a high take rate on the premium config of Cybertruck with full self-driving, bringing the cash buyer ASPs up to about 75 grand. That's what I expect. And then I don't think Tesla is going to lease Cybertrucks for a long time because we're not going to be producing very many for a long time. So why let people lease them if you can sell all of them and get better cash flow and working capital to try to get this model past its break-even point quicker? So not very many revenue dollars because the production volume is going to be so low for a while. But by the middle of next year, I've got $1 billion worth of Cybertrucks being sold per quarter and quickly ramping up to maybe end the year at a quarterly run rate of $12 billion worth of Cybertruck contribution. And then over the full year, 2025, maybe $23 billion worth of Cybertrucks being sold. This is not a small product line. If people are willing to pay a lot for a Cybertruck, and if Tesla can sell a lot of them, they can make a lot of money. Tesla Semi, we don't know how much Tesla is charging Pepsi for these, but my guess is it's about $350,000. These are small revenue dollars, less than $20 million per quarter probably so far, and probably staying there until Tesla can ramp up the production volume of this product. Maybe in 2025 we'll see more than $1 billion being contributed by Tesla Semi, but until then it'll be a minority contribution product. So that's how you get to the totals. This is the total section where I'm adding these up. If you want to pause and look at that, you can, but I have to get through a lot of content in this video because I'm not just doing revenue, I'm also doing cost of sales. So here's the Fremont site subtotals, then we've got Shanghai, and we've got Berlin, and of course below that we're going to have Texas. Before we get to our totals by automotive revenue versus leasing revenue versus total Tesla automotive and leasing revenue, which is this section where you can see how many dollars I'm forecasting before currency translation adjustment. In the previous video you saw that in the quarters where those impacts have been reported by Tesla, I make adjustments to these amounts to get them to what they are after adjusting for currency translation. Then, after automotive comes the energy section. So how do you forecast that? Well, you start with solar deployed and storage deployed. You measure solar volume in megawatts of production, and you measure storage deployed in megawatt hours worth of battery capacity. So Tesla reports these numbers in their investor earnings letters. So we know what these numbers are for the closed periods, and we can forecast from there what we think the growth is going to be. So if solar ramps up some from what we saw in Q1 and Q2, closer to what Tesla was reporting for most of last year, we'll see 74 megawatts in Q3, 83 megawatts in Q4 is what I'm forecasting for solar, which appears to be declining some from what we saw last year. Then for storage deployed, in terms of megawatt hours, this has been ramping up steadily. So 1.1 gigawatt hours, 2.1 gigawatt hours, 2.5 almost, 2.9. 3.8 is a huge jump, a full gigawatt hour worth of storage deployed increase sequentially from Q1 to Q2. So I have not quite that big a jump again, but a pretty big jump from Q2 to Q3, and then another one from Q3 to Q4 as Tesla ramps up their output from Lathrop. Could Tesla beat these numbers? Sure. Could Tesla miss these numbers? Sure. I'm not going to be surprised whatever I see for these four, and it's going to have a big impact on how close my forecast was for revenue, because my revenue depends on these volume assumptions to build up. Then we get to the solar revenue per watt. How much is Tesla charging for solar? I've got that number coming down some in my forecast, Q3 and Q4. Continuing this trend that we saw from last year when it was higher. It was over $5 at one point, and it's been coming down since then, so I'm forecasting that trend to continue. Storage revenue per watt hour is moving the other direction in my forecast. I've got it recovering some from the drop we saw. Q2 was very low storage revenue per watt hour, so this is just recovering back to the same levels we saw a year ago for storage revenue per watt hour. And the revenue dollar amounts down here are relative to, let me click on this, what we saw in the prior quarter sequentially here. So I'm just building upon what we saw in the previous quarter. So if we're expecting these volume increases, I'm expecting revenue increases. This is a pretty small portion of Tesla's overall income statement, but that's what I've got in here for revenue growth associated with this volume growth. Then for Powerwall, I've got that dependent upon its relationship with the Solar Roof product. When you buy Solar Roof, you have to buy a Powerwall, or you have to buy more than one Powerwall if you want. You can buy as many as you want within reason as backup energy storage for an uninterruptible power supply for your home, which is very valuable when the power goes out to be able to keep the lights on and the air conditioning running. And for Megapack, I've got a build up here that is based on how many Megapacks Tesla can produce per day times the 90 days in a quarter times the revenue per Megapack, and I'm dividing that by 1,000 to get it into billions, which is what I'm forecasting revenue in. So in Q2, I had that at 7 Megapacks produced per day. That's up to 7.8 in Q3, 9 in Q4, and then in future quarters I'm raising the output 11, 14, 18, 22, and then when the Shanghai Megapack factory comes online, the rate will be able to improve to global Megapack production per day of 26, 30, 34, 38 by the end of Q4 2025. So that's how you get to these big revenue numbers that are a huge fraction of the total Tesla energy revenue, right, Loki? Yes? Loki knows. He's barking about how Tesla's energy division is going to be growing faster than automotive over that time frame. Thanks for the reminder, Loki. I appreciate your contributions to the broadcast. Here's the services and other revenue section. So I've got a couple of components here. One of those is how large is the fleet of vehicles on the road. And then another one is just growth relative to what we saw in the previous quarter. So I've got 579 times 0.78 times 1 plus 162. D through Y 162 is giving me the size of the fleet that have been delivered. And then I'm adding to that the sum of row 523. Let's scroll up here. So this is the total of all models automotive revenue for vehicles people bought, not for vehicles people leased, because those are going to be under warranty whenever they bring them in for repairs. And then I'm adding to that rows 1266, 1394. I got a lot of fun stuff happening in this calculation. For my services and other revenue, feel free to pause and do a lot of homework and figure out how I'm forecasting this to change over time, but not very different. The logic I'm applying for Q3. Services and other revenue ought to continue growing every quarter going forward, is my assumption. And that gives you the total revenue. This is total revenue before being modified for currency translation adjustment. So for future quarters, you'll see these as the same numbers that I'm forecasting on the income statement. And for actual quarters, you'll see these as the number before the currency translation adjustment changes it to whatever number appeared on the income statement. All right, next we've got the regulatory credit revenue. That's part of our revenue. And you can see what I'm forecasting here for that. You know, about the same number we saw in Q2 and growing a little from there in Q4 on higher delivery volumes. It kind of would make sense if you're making about the same amount per vehicle to expect something close to $0.4 billion of regulatory credits in Q4. Again, a pretty small amount compared to Tesla's total revenue, pretty small fraction of the business now. And that's the end of the revenue section, so that's all the revenue buildup. But after that, I also do cost of sales. So in the exact same format that I did revenue, hey, how much does it cost us to make these vehicles? And you can see what my expectations are here, that the cost is going to come down to make a base Model S by a little bit versus where it was in Q2. Not by a lot, but Tesla has a continual cost improvement or a continuous process improvement philosophy that their engineers are always looking for ways to make the vehicle a little less expensive than it was the quarter before. So we're going to see some of that happen here. Then for paint, I've got these becoming a little less expensive than they were a couple of quarters ago, is what that one's doing. Performance package, I'm forecasting at slightly less in Q3 than I think it was in Q2. Stuff like that. For these, I'm holding to the same cost of wheels. Interior at a 25% take rate on a $600 option. Full self-driving, just a tiny token amount. I'm holding $100 in here for every vehicle, I think, for every quarter, just saying that there is some cost associated with the full self-driving project in terms of cost per vehicle. So how much does it cost to make a Model S on average as configured by their buyers? Well, that number has been coming down since the Plaid refresh happened, and I think it's down to about $77,000 per Model S at the cash buyer line. Before I make these couple of adjustments, you don't need to adjust for leased on the cost of sales, because the cost of sales isn't going to be any different if the buyer is leasing versus purchasing. Then I've got some cost here for destination and delivery fee. Probably it's a little more than that, but whatever. I've just got something there. Regulatory credits, there's a tiny amount there. Probably somebody has to process paperwork and stuff, and Tesla has to pay them. Other full self-driving, OTA upgrades, data, probably not very big costs, but I've got something slotted here for them. So I've got Model S at a total cost of sales per delivery of around 77 grand in Q3, same as it was in Q2, slightly less than that in Q4, making these total cost dollars per quarter about $700 million per quarter is what I think it costs Tesla to make Fremont Model S. All right, what about Model X? Same kinds of assumptions here, with the base coming down some every quarter, and the rest of the costs looking like this. I don't want this video to be extremely long, so I'm going to go pretty quickly through this one since it's so similar to what we just saw from Model S, resulting in a bottom line cost of around 83 grand, somewhere in that neighborhood, is what I'm guessing. And I sure wish Tesla would tell us what these costs are, so we would know. Even if they could just tell us for prior years what they had been, when it's no longer newsworthy to print FUD about the detailed cost information, it sure would be nice to know at some point how I'm doing forecasting these very detailed costs, instead of just shooting in the dark, which is what I'm doing, if I'm being honest. Fremont Model 3, we've got a base config assumed to be, 35, 36 grand, something like that, with no options. But then for every option people do purchase, those would come with a cost of sales. That would bring up the total to, 37.5, something like that. Maybe close to 38,000 by the time you get to the bottom line total cost of sales per delivery, including some of these below the line items, making about $2 billion worth of Fremont Model 3 cost of sales per quarter. Then for the Fremont Model Y, I've got that base at around $37,000. Maybe it's less than that. I don't know, but that's what's in my forecast model, making about 40 grand after all these options come in, including the performance package, which gets better brakes and better electric motors and stuff. So about $2.5 billion worth of cost of sales for the Fremont Model Y is what I have in my forecast. Nothing for the Roadster, once again. Shanghai Model 3s, here's how these look. I've got the cost being higher here because this is the quarter that's going to get burdened with the cost of retooling the factory to make Shanghai Model 3s. So because this was the first production location to do the Model 3 Plus or Highland upgrade, I've got a one-time hit to the base configuration of, $5 grand worth of extra cost here, somewhere around that. I just buried it in this base config because that's where it belongs. The additional costs of factory downtime and production prototyping and stuff. In the same quarter that Tesla starts selling these vehicles, that's treated as cost of sales instead of as research and development expense. So I've got a higher cost there, but then coming back down in Q4 to something closer to what we saw last year, before we got to the end of the run of the older version of Model 3 from Shanghai. All right, so there's those costs. Again, less than $3 billion worth of cost of sales per quarter is what I'm forecasting for Shanghai Model 3s. How about the Shanghai Model Y? I think those cost about 28 grand each, so not more than the Model 3's cost. You get the advantage of the casting for the Model Y that you don't get for the Model 3, should reduce the cost of producing Model Y relative to Model 3. So about $30,000 is what I think the cost is to produce a Shanghai Model Y, or $4.5 or $5 billion worth of cost of sales per quarter, something like that. Berlin Model Ys, what do we think the cost is? I think with higher output from Model 3 or with ongoing process improvements as they ramp, that ought to be down to about $35,000 for the second half of the year, with a big, again, as we saw with revenue, contribution from the long range and performance package variants, because those are the only kind they make in Berlin, which is why those amounts are large, getting it to 44,000, 43,000 worth of cash buyer cost of sales, and about 45,000 or 43,000 at the bottom line for total cost of sales per delivery, with the dollars being about $2 billion worth of cost of sales out of Berlin per quarter. Then for the Texas Model Ys, I've got their costs continuing to improve as time goes by. Even if they're not making more vehicles, maybe the cost per vehicle is lower as their ramp improves. And we get to maybe $1.3 billion worth of cost of sales from Texas Model Ys in Q3, up, about halfway to $2 billion by the end of Q4, and then crossing $2 billion worth of cost of sales before the end of next year from Fremont Model Ys. What about Cybertruck? Those probably cost a lot still to make because they're making so few of them. The number might be over $1 million for all I know, but what I have in my forecast model is that it's costing Tesla about $289,000 per Cybertruck they make, because they're not making very many of them, so they can't spread the cost among very many. But that'll drop precipitously in Q4 by $100,000, and then by $60,000 the quarter after that. And then at some point in the middle of next year, the costs of sales per Cybertruck ought to be less than the revenue per Cybertruck is, and they can start contributing gross margin. And we'll see that when we get to the cost of sales percentage section, because the cost of sales percent will fall below 100%, which is where you should always want it to be. Semi, how much does it cost to build a semi? I think it started off costing $1 million per semi, and that number has been coming down some since, but is still probably $400,000 or more at press time. Alright, so how many cost of sales dollars does that make? It makes this many dollars by model, with the leasing being a little bit more money contributed. If you add the leasing with the cash buyers, that gives you a total Tesla Automotive and leasing cost of sales per vehicle. This is how much it costs Tesla to make these cars. $16 to $19 billion is how much I've got my forecast increasing by from Q3 to Q4. We'll see how I do when Tesla reports those numbers. And I've got the costs in here for Tesla Energy. Costs are pretty high for energy production. And then let me just take you to the Megapack, which is the most important one. So I think Megapack cost of sales was 89%, 81%. I've got it at 83% in Q3, 80% in Q4. This is the biggest contributor to total Tesla Energy cost of sales, and that's how I'm doing it. Let's look at the services and other cost of sales. I'm really just applying a 97% cost of sales for Q3 and Q4 and hoping to make a 3% gross margin in services and other, which gives us these total cost of sales dollars and cost of sales percentages, and these total gross margins. That's how you get to more gross margin than we had in Q2. It's just math from what we saw above in the revenue and the cost of sales sections. If you believe all those assumptions, then you believe this is going to be the gross margin percent. I'm not typing in a 20 and saying, let's hope it's 20. This is a calculation based on all the numbers we just saw. And then the fourth stage of my detailed Tesla earnings forecast model is all about showing you cost of sales percentages for everything that we just forecast a cost of sales dollar amount and a revenue dollar amount for, you can divide the cost of sales by the revenue and see what percentage of the sales of that kind of thing are required just to build and deliver that product to that buyer. So you hope for numbers that are less than 100%. Fremont Model S, of course, is going to be worse in Q3 and Q4 at the new, much lower prices than where they were last year and earlier this year. So you see those for Model S, for Model X. I've got a really high base config cost of sales percentage here forecast in Q4 when there's going to be a full quarter at that new price of $79,990, leading to pretty high cost of sales percentages, but still profitable, still making money for Tesla. Then for Fremont Model 3s, here's what these cost of sales percentages look like. Pretty high. I'll be able to fix that when I fix this base configuration here. So I need to raise the base config revenue for Model 3 in my next forecast for Q4, as I mentioned earlier. And here's the Fremont Model Y. I have to leave this the way I found it so that I can save this file as a documentation of what my forecast was on September 10th in case I need to go back and tie out to it, hey, what changed between my final Q4 forecast and what I published for Q3. I'll be able to compare the two spreadsheets and see, oh, it was that Model 3 revenue base config assumption that I made that was too low for Q4 that I fixed. So here's these cost of sales percentages for Fremont Model Ys. You can pause that and check it out if you want. Here's the Shanghai Model 3s and Model Ys. So a really bad looking Model 3 from Shanghai cost of sales percentage that ought to reverse in Q4 because that downtime for line upgrades will be over by the start of Q4. Nothing for the robotaxi that we might see Shanghai build. I don't know if Berlin is ever going to make a Model 3. I might have to change this section to be $25,000 car or robotaxi, whatever Tesla names those when they unveil them, finally. They don't want to Osborne the current lineup of products by announcing something better and cheaper too early and freezing out the orders of current products, which is smart strategy if you don't want your company to go bankrupt. Next is Berlin Model Y. This is the cost of sales percentages I'm forecasting for Berlin Model Ys. Should be improving the more of those they make, getting closer to the cost of sales percentages that Fremont makes for Model Y. Same deal with Texas. They ought to have better and better cost of sales percentages as time goes by. Here's the Cybertruck percentages with crazy 300% cost of sales. Yeah, that's not going to be true for very long as Tesla makes more Cybertrucks and semis. These will fall below 100%. And here's a section that gives you the total cost of sales percentages by model if you want to see those all together. I did, so I made this section here. Here's what the leasing section looks like with those, 60% leasing cost of sales percentages that you can get if you just look at the income statement and divide the leasing cost of sales by the leasing revenue. And here are the cost of sales percentages for the Tesla Energy products. So, about 100% probably on solar panels, around 90% for solar roof. Hopefully only a 78% cost of sales on Powerwalls. There's a new version of Powerwall out now that probably has a lower cost than they used to have in the past, so I'm forecasting that to get better. As Megapack also gets better, there may have been some fluke in here that caused this number to be a little lower. Hard to believe they could sustain cost improvement of 9 points per quarter. That's not going to happen for very many quarters. So I've got that coming back up to 83 and then down to 80 in Q4. We'll see how I do. And services and other cost of sales, I've got improving to be maybe a little less than 90% by the end of this year, continuing the trajectory that we've seen over the most recently reported quarters. And that's how you get to the first row where this tour started, in part 14, with the income statement. All the first 1,166 rows are dedicated to telling you what's going to happen on these, first 12 rows of my income statement. But you feel good about your build-up for them, at least until Tesla reports numbers that are wildly different, if that happens. No, I've been pretty fortunate to be close sometimes. You have to be fortunate to be pretty close. Right, Loki? Loki knows it's dangerous to forecast stuff. And the first rule of forecasting is whatever you forecast, it will be wrong. So all the numbers that I just reviewed with you are going to be wrong. You just hope to be less wrong. That's rule number 2 as time goes by. Well, I hope you've enjoyed this video in this video series. If you have, click the like button on whatever platform you're watching me. If you're watching me on YouTube, you'll be able to find a subscribe button over here you can click for free, and then you can click the notification bell to be alerted whenever I post fresh content. Thank you to everyone who supports me, whether you do that on X or on Patreon or on YouTube, as my executive producers Kathy Kitchler and Rebellionaire.com did. Easy for me to say. And I'll see you in the next one.